This is the ZipRealty quarterly housing report for the second quarter of 2008. Included in the report is a look at June's home inventory for 18 metropolitan markets, a deeper analysis of pricing in 6 of those regions, and an analysis of buyers' pricing confidence. Data is compiled from the multiple listing services and a ZipRealty survey of buyers and sellers. The supply of homes available for sale has increased 6% from June 2007 to June 2008. The numbers are the latest sign that the supply of homes remains ample. The National Association of Realtors recently reported the number of single-family homes on the market in July was enough to last about 11 months at the current sales rate. Sacramento, California saw the largest annual decrease in inventory of 22.4% fewer homes for sale. Seattle saw the most significant increase in inventory with 10,000 more listed properties. This is a 23.4% increase in inventory. Home sellers continue to adjust to a market in flux. Since June 2007, 6% more sellers have made price reductions to their home to make them more attractive to buyers. By the end of the quarter, more than 4 in 10 sellers have reduced the price of their listed home. Phoenix ended the quarter with the largest number of price reductions, with over half of the active inventory adjusting down. Miami had the largest increase in the number of price reductions from the end of last year's second quarter compared to 2008. Price reductions rose 11.4% in South Florida. A closer look at pricing trends by zip code, with at least 30 transactions in Boston, Chicago, Los Angeles, San Francisco, Seattle, and Washington, D.C., show a range of asking price. Hot zip codes were in Chicago and San Francisco. Chicago neighborhoods of the near South Side, the Loop, Auburn Gresham, along with Palo Alto, California, and San Francisco's Noe Valley, saw properties continue to sell above the asking price. Chicago had some of the coldest zip codes also. Cold zip codes included Roseland, Humboldt Park, Pullman, Chicagoland, and South Chicago. The entire Boston market is seeing accepted offers below listed price. For the quarter, no zip code saw an average sales price above asking. The hottest market was Haverhill at 99% of list. The cool markets were Swampscott and Beverly at 92%. In Chicago was a mixed for the quarter, with zip codes in both hot and cold for the 6 metros reviewed. As mentioned before, the near South Side, along with the Loop, were leading the hot list. As well, on the cool side were Humboldt Park and Chicagoland. In Los Angeles had 7 zip codes right at list price, but overall the market has been cool. Palm Springs, Indian Wells, Torrance, Corona del Mar, El Monte, and Newport Beach are seeing offers, on average, accepted at 92% of listing. The San Francisco Bay Area still has some of the strongest zip codes. Palo Alto, San Francisco Noe Valley, and the Inner Richmond, along with Berkeley, are holding steady on pricing. Areas furthest from San Francisco, like Rio Vista and Discovery Bay, are lagging behind at 92% of list. In Seattle, the inventory numbers have been putting pressure on pricing. With 162 zip codes surveyed with 30 or more transactions, the average sales price has been well below asking. In the Washington, D.C. area, sales prices have been averaging between 92 and 99% of the listing price. Now for a look at market perceptions. ZipRealty asked buyers and sellers what they think will happen to home prices in their area. This market perception survey reveals buyers and sellers remain bearish on prices. Buyers continue to believe that bargains exist in the market. 61% of them surveyed expect prices will continue to fall. Respondents in Texas, Washington, D.C., and Denver are more optimistic about prices holding steady. Most people think that price decrease will be mild. 66% of buyers and 72% of sellers think prices will decline between 5 and 10%. It is a 42% increase in buyers who think prices will continue to decline compared to the same time last year. Home sellers have seen declining values nationally, and 43% of surveyed sellers anticipate that this trend will continue over the next 6 months. Buyers and sellers in Southern California seem to be the most pessimistic that home prices will continue to decline. This is the second quarter report. For more information and details of the report, please visit www.ziprealty.com. www.ZipRealty.com.